Good morning, students. Welcome all of you to today's class. Today also we are continuing with the chapter company accounts, and the topic is issue of shares for consideration other than cash. Okay, so the basic journal entries we discussed in the last days. So today we discuss some other adjustments where share can be issued in a situation not for cash, but when company purchase some assets from somebody, or when company issue shares to promoters as part of incorporation expense, that time also we can issue shares. So instead of making payment through cash, here we are giving what? Shares. So that situation, how to pass the journal entries, that we will study. Okay, so meaning, first, when a company issue fully paid shares for purchase consideration other than cash, of it is called issue of shares for consideration other than cash. So when company issue fully paid shares, so fully paid means they assumed it as they paid full money. For means nothing is remaining to pay in that full. The shares is money, share money is fully paid for purchase consideration. So what do you mean by purchase consideration? When we purchase something, in return what we give, that is called what? Purchase consideration. Suppose when we go to market and from shop something we purchase, what we give money, that is called purchase consideration. So when company purchase something from others, machinery or anything related to business, when they purchase, or when they purchase other business, one company can take over the business of another company. So that time also, instead of giving money to them, we can make them shareholder of our company. Okay, so equal to that money, that much in number of shares we will issue. So they will not give money to us for that shares. Actually we have to pay them. Suppose 5 lakhs we have to pay them. So instead of paying the money, we are giving them what? Shares. So that is why it is known as consideration other than cash. So here the word meaning consideration means something in return, that is called consideration. Okay, so two situations mainly we can do this: issue of shares to promoters, then issue of shares to for purchase of assets. So when we purchase assets, that time also we can do, or when we issue shares to the promoters, that situation also we can do this. Okay. Case 1 is issue of shares to promoters. So if you are issuing shares to promoters, then what is the journal entry? This already we did actually. Incorporation cost or formation expense account added to share capital, that we have to write. Okay, it's a part of incorporation or registration of the company. Now case 2 in detail we have to discuss. So case 2 is issue of shares for purchase of assets. Okay, so when we purchase assets, what we can do is, first entry is when assets are purchased from the vendors. So when we purchase the assets from vendors, what we have to write? Sundry assets account debtor to vendor. Okay, next, vendors account debtor to share capital. See here, why asset is debited? Because debit what comes in, what is coming in? Asset is coming in. So that is why assets, whenever we purchase asset will be debited, you know that. So we didn't pay money, so instead of cash we are writing the name of that person. Okay, vendor. Then when shares are issued at par, so here also we can issue the shares either at par or at premium. So if shares are issued at par, then what we write? This vendor what we credited here, the same we have to debit. Okay, so now vendor account will be closed and we are issuing them shares, so share capital. So this is when it is issued at a par case. So if it is at a premium, when shares are issued at a premium, that we studied both cases. Shares can be issued at a par, issued at a premium. So if it is issued at a premium, then what will come? Same entry, vendor's account debtor to share capital, the same entry of this. Okay, only you have to add what? Securities premium reserve account. So here premium amount, share capital amount we have to separate and write. Okay, so now sometimes amount only they give, this much amount we purchased something like, so we have to calculate the number of shares issued. So to calculate the number of shares issued, equation is there, amount payable by issue price. Okay, so in par case no problem, if 9 lakh you have to pay, it will come 9 lakh only. But if it is at premium, we have to calculate the number of shares issued. Okay, so for that equation is amount payable by issue price. Okay, we'll discuss a question so you will understand it. So X Limited purchased the business of Y Limited for rupees 9 lakh. Okay, so here the amount is given 9 lakh payable in fully paid shares of rupees 10 each. Okay, what entries will be made in the books of X Limited if such issue is at a par or at a premium of 25%? So both cases are there. So both the company cannot do, any one only will come, but we are studying it, that's why both cases are given. So what is the purchase consideration in this question? So purchase consideration means the amount we have to pay to them. So X Limited, who purchased X? So we are writing in which company? Purchasing company, X Limited we are writing. From where? The business of Y Limited. So X Limited took over the business of Y Limited for rupees 9 lakh. So this 9 lakh is the purchase consideration. Understood? So purchase consideration is 9 lakh. So for this 9 lakh rupees, how many number of shares you have to issue? Equal amount, equal number of shares, how much you have to issue? So one share price is rupees 10. We'll directly go to the answer. So first entry I told you what you have to write. First, no confusion. Sundry asset account debtor to vendor. So here vendor is the seller from whom we purchased, Y Limited. So sundry account debtor to Y Limited 9 lakh, 9 lakh. Now the same Y Limited will be debited here. What is credited that you have to debit. Okay. Case 1 at par, Y Limited to share capital. So par case I told you no need to calculate the number of shares. Directly you can write the purchase consideration. If you calculate also the same will come. Okay. Means here number of shares will be how much? 9 lakh divided by 10. So what will come? 90,000 will come. That's why I told you no need to calculate. Okay. But in premium case, this one we have to calculate. So when shares are issued at a premium, so what will come? Y Limited only debited. Here also that no change at all. So remember, so one sundry asset to Y Limited vendor. Next debit entry will be the vendor name, vendor account debtor. Here vendor is Y Limited account debtor 9 lakh. Then we have to bifurcate now. So here it is for 25% premium. So what is the uh, what is the premium amount here that we have to calculate? Working note. So number of shares to be issued we have to calculate. Okay, this is next question. This one we were discussing. Yeah, so number of shares to be issued, number of shares is equal to amount payable by issue price. Okay, so this is the equation, remember. So amount payable is 9 lakh. So 9 lakh divided by issue price is 10 plus 25 percentage 25% premium. So that means 25 percentage of 10. So 2.5 will come. Okay, once again I'll write. So here 9 lakh amount payable 9 lakh divided by issue price 12.5. So how much will come? 72,000 will come the answer. Just to do it and solve it and see. So 72,000 will be the number of shares. Now 72,000 we have to take for the entry. 72,000 will 10 will go to share capital. Then 72,000 into 2.5 will go to what? Premium. Okay, so 72,000 into 10 what? 7 lakh 20,000 will come in the share capital account. Then premium 72,000 in 2.5 1 lakh 80,000 will come. Okay, so 7 lakh 20 plus 1 lakh 80, 9 lakh total. So this way we have to bifurcate and write when it is for premium. So only premium case you have to calculate what the number of shares issued. Okay, so number of shares issued will be amount payable by issue price. Okay, so we'll check the journal entry. You can see here Y limited 9 lakh, share capital 7 lakh 20, security premium 80,000. Okay, here issue of 90,000 share names 72,000 shares you have to write. Okay, this way you have to do. Now another one question we'll discuss. The way they ask the question, that will be little different, that's why I included this also. One more question is there. So this one just to check. Tulip Limited issue shares of rupees 10 each as fully paid to the promoters for their service. So issue of shares to the promoters. It also issued 30,000 shares of 10 each credited as fully paid to the underwriters for their commission. So here two issues done. One is for the promoters and another is for the underwriters. Underwriters we studied last year. Underwriters are the people or institution who guarantee minimum subscription. Suppose the publish subscription not guaranteed minimum subscription 90% नहीं हुआ तो publish issue में ये लोग सब्सक्राइब करेगा हमारे शेयर. दैट इज कॉल्ड वर्ड अंडर राइटिंग. सो जैसे अंडर राइट करते हैं उन लोगों को हम अंडर राइटिंग कमीशन देना पड़ेगा. ओके, so that case what journal entry we have to pass is incorporation cost account. If when shares are issued to the promoters, we have to write incorporation cost account debtor to share capital. So how many number of shares? 50,000 into 10. That direct you can multiply and write. Then underwriting commission, first we have to pass the due entry because it is expense for the business. So underwriting commission account debtor to underwriters 3 lakh 3 lakh. Then next entry, for them we issued shares. So underwriters account what we credited, to cancel that we are debiting. All entries like that only. Okay, so whenever it is closed then only it will be having the opposite effect. So underwriters account debtor to share capital. How many shares issued? 30,000 into 10. So very simple it is. Clear, no? So instead of promoters you have to write what? Incorporation cost. Underwriting commission first due, then share issued. Okay, so that is for shares issued to promoters or underwriters. That also over. Now another question again for consideration other than cash. See here, X Limited purchased a running business from Y Limited for a sum of rupees 30 lakhs. So here also X Limited is the company which purchased business from Y Limited. Amount payable is 30 lakhs. So payable 40% by a check. So what company did? 40% of the amount they paid by check, immediately paid, and the balance, so remaining amount fully paid equity shares of 100 each at a premium of 20%. So 100 each is the value of share that they issued at a premium of 20%. So 20% of 100. So what will come? 20 will come. So now issue price will be how much? 100 plus 20. So we have to take 120 is the issue price. Okay. So what are the items they purchased from the business is building. Here you see asset given separately. So that's why this question I am discussing. Debtors 4 lakh 30, plant and machinery 8 lakh, cash 90,000, stock 5 lakhs, sundry creditors 2 lakhs. So these are the different assets they purchase. So when assets they have given like this separately, so asset usually what we write sundry asset account debtor to vendor. So instead of sundry asset you write the assets name itself in the journal entry. Okay, so we'll discuss the answer. So what are the assets purchased? Our journal entry you remember, sundry asset account debtor to vendor. So here asset also there, liability also there. So what is the normal entry we have to pass? Asset account debtor to liabilities, then to vendors, liability also will be credited. Okay, so when this type they give, you have to write like this: asset separate debit and liability credit, then vendor also credit. Okay, so here what are the assets? Building 12 lakh, plant and machinery 8 lakhs, stock 5 lakhs, sundry debtors 4 lakh 30, cash 90. This one you don't write, this is actually afterwards we'll write. So these are the items given in the question. Now sundry creditors 2 lakh, this line one line up, you make it down. Okay, this is creditors 2 lakh, and Y limited it is given 30 lakhs we have to pay. Okay, now when you total, no, here difference will come on this side. That's why when this difference comes on the asset side, what you have to write? Goodwill, balancing figure. That is why B slash F is written. Balancing figure 1 lakh 80 is coming. Okay, if balance come in the credit side, you have to put capital reserve. Okay, now 40% amount we paid immediately through check. So 30 lakhs we have to pay. So 40% of 30 lakhs is 12 lakhs. Okay, so Y limited to bank, vendor to bank, immediately we paid 12 lakh 12 lakhs. Now remaining amount, how much? 18 lakhs there. So for that 18 lakhs we have issued what? Shares at a premium of 20%. So remaining 18 lakhs means how many number of shares we have to issue, that we have to calculate. So what is the equation? Amount payable by issue price. Okay, so for the working note I'll write here, amount payable here is 18 lakhs, issue price is 100 plus 20 premium. So how much? 120 is the issue price. Okay, so 18 lakhs divided by, so 18 lakhs divided by 120, that is 15,000 will come. Okay, so 15,000 will 100 will go to share capital, 15,000 into 15,000 into 100 will go to share capital, then 15,000 into 20 will go to प्रीमियम. ओके, सो 120 को हम अलग अलग करना है, 100 अलग 20 अलग, मीन्स मेन फेस वैल्यू separate, premium separate. Okay, now come to the answer. So 15,000 shares we have to issue. So Y limited anyway 18 lakh only, understood? No, for 30 lakhs we paid how much? 12 lakhs already paid, so that is why 18 lakhs remaining shares. For that we are issuing remaining amount, sorry, for that we have to issue shares. Okay, so 15 lakh into 10, 15,000 into 10, how much? 15 lakhs, then 15,000 into 20, 3 lakhs that will come. Okay, so this way you have to pass when assets and liabilities given separately. If one more thing remember, if instead of check, if they have given bill, they paid through bill, then what you can write here? Bills payable. Okay, instead of bank, what you have to write? Bills payable you have to write. That only the change. And one more thing remember, If it is not tallying, that means asset side not tallying means goodwill. Liability side, if it is not tallying, means capital reserve you have to write. Okay, so purchase consideration, whatever given in the question, that you have to put in the vendor account, means Y Limited here, vendor account. Okay, so I hope you understood. If any doubt, kindly contact me. Thank you so much. Bye, take care.